Okay, good morning, FX Pesa family. Good morning, my good people. Good morning from East Africa. I'm Prudence Maximilian. Of course, you call me Kaka Taifa, and we are back to this. So, I'm the one who is running today's session, the 11 a.m. session. Of course, the session very well designed for market insights, sharing what is likely to happen in the markets today. Of course, we are going to pass through everything that a trader needs in order for him or her to make the trading decision. And of course, I also want to remind you that everything which you see here, all these sessions, are fully sponsored by FX Pesa. So if you're here in 2026, remember that FX Pesa has sponsored you to make sure that at least you attend these sessions for free. So that's why we're here. And apart from that, I also want to remind you that for those people who are from Uganda, Kampala, Uganda, we have the physical presence there. We have Emmanuel Iboto, our expert from there, is going to guide you in one way or the other, is going to lead you in one way or the other, so that you can be equipped with tools and all resources that can help you in one way or the other to become a good trader. But apart from that, if you're from Kenya, we have also the physical presence in Nairobi. You can also book your session with Robert Mbogo. It's going to guide you in one way or the other. I'm quite very sure that Robert is the one who is always leading this session here at 11 a.m. I'm quite very sure that he's always giving you the insights that can help one person to grow from one stage to the other. And of course, you can also access the sessions which are always being done there. I think you are going to learn from the best and of course trade with the best. But apart from that, also if you're from Tanzania, we also have the physical presence in Dar es Salaam, Tanzania. So if you have your relative, your friend, or anyone you know who really wants to learn about trading, you can refer them to our sessions. We are located at Dar es Salaam, FNB House. Of course, it is called Poster FNB House, floor number 3. So you can also take advantage of that, go and learn physically. But apart from that, we also have a lot of initiatives that are guiding you in one way or the other. We have the online sessions. We have the mentorship session, which is always done at 8 p.m. So if you are new to trading, you're just getting started, you are fresh, make sure that you don't miss the 8 p.m. session, of course, East African time, plus 3 GMT. But if you are, you are not a beginner, if you're a trader looking forward to get market insights, looking forward to get, let's say, market analysis and something like that, we have this one session, the 11 a.m. session. This is a good fit for you because we are going to analyze the markets here. We are going to share each and everything that a trader needs in order for him or her to make the right trading decisions. So the 11 a.m. session is very well designed for those people who are at least traders, or let's say someone who is not a beginner. But apart from that, we also have the market snapshots daily. Right now, the time I'm speaking here, Robert Mbogo is live on YouTube giving out the market snapshots and something like that. So you can also tune in there. But apart from that, we also have the Swahili version of these sessions. We all know we are from East Africa, and of course the East African language is Swahili. For those people are from Kenya, from Uganda, from Rwanda, from, let's say, anywhere in East Africa, they know Swahili. So we also have the Swahili version of these sessions. And of course, it is always being done at 4 p.m. East African time. So you can also take advantage of that, attend those sessions, and learn in a very easy Swahili language. Okay, apart from that, I also want to remind you that with FX Pesa, you can get 100% deposit bonus, you see. So if you have never deposited or if you have never traded with FX Pesa, your first deposit has the bonus. So you can claim your 100% deposit bonus on your deposit. So take advantage of that, guys. If you are going to start now, you can open your trading account by using FX Pesa. By going to any browser, you just select www.fxpesa.com. You're going to get that. Or you can just visit our socials. We have Instagram, TikTok, let's say Facebook, LinkedIn, X, and everywhere at FX Pesa. And then you can just use the link on bio. You're going to find each and everything there. And for those people who really want to get the links to the sessions, all the sessions are on the link on bio. So if you just go to FX Pesa's Instagram page, and then you just use the link on bio, you're going to access all those there. So take advantage of that, guys, and learn and of course, trade with the best. So back to the session, guys. It's Wednesday. It's Wednesday. And yesterday, for those people who were here, we had CPI. The data came out, and of course, not good for dollar. You see, not good for dollar. So that's why you saw gold continuing with its bullish rally. That's why you saw all those pairs which have USD as their quote currency, all of them went up. I'm speaking about GBP USD, Euro USD, anything related to USD, but USD is the quote currency. All of them had a bullish rally. And of course, not only that, we can also go and check what is likely to happen today. And of course, we always analyze these charts of these markets in different perspectives. We analyze these charts technically, we analyze these charts fundamentally, but also we analyze these charts sentimentally. By studying the mindsets of traders and investors who are present in the markets, you can also know the right bias of these markets. So starting with the first side of market analysis, every trader has to analyze fundamentally. You have to know exactly if in a very specific day that you are going to trade, if there is any external factor which is likely to affect the markets that you're going to trade. And here we speak about news. Let's say, for example, yesterday we had CPI, and of course we have to go to the calendar and check if there is any information which is likely to affect the markets today. And if they are there, we are going to see the exactly time the exactly time when those informations are going to be released, the exactly date when those informations are going to be released, the currencies which are going to be affected, but also we also get the previous data and what they are forecasting on that information. So the impact of those informations will depend whether the actual is greater than what they're forecasting or the actual is less than what they're forecasting. And then from there, that can cause either that currency to be bullish or bearish. So let's go to the calendar and see if we can check and see if there is any information which is likely to affect the markets specifically today. You see, specifically today. Okay, let me display, and if you have anything that you want to ask, feel free to ask on the chat. I will pass through everything, and of course we are going to share also here. So by using Forex Factory, today is January 14th. Of course, it is Wednesday, and as you can see on the charts, on the calendar, today Wednesday, we have these informations affecting the dollar. And of course, these are PPI. You see, PPI and retail sales informations are going to come out today. And of course, it is going to be 4:30 p.m. You see, 4:30 p.m. East African time. And of course, it is going to affect the US dollar. The first one is called PPI-MM. The second one is called retail sales MM. The third one is PPI-MM, but also the fourth one is retail sales MM. So we have to see the source of these, what they measure, the effect expected, and everything like that, you see. And of course, remember, there is a very special note here. The release date delayed by 34 days due to the US government shutdown. There will be two simultaneous release as the source skipped the data released last month. This data pertains to the month of November. So last year we had a very unique year. I think traders remember that we had the longest US government shutdown ever. You see, the shutdown lasted for over 40 days. So there are some departments which were in total shutdown. So these informations were not being released. And of course, also this department was among those departments which were in shutdown. So that's why we have this note here. So the information which is going to come out, the source is the Bureau of Labor Statistics. Of course, we are speaking about the US. Of course, it measures the change in the price of finished goods and services sold by producers, excluding food and energy. And the effect from this, actual greater than forecast, is good for the currency. So for PPI, actual greater than forecast is good for the currency. And when we speak about actual greater than forecast, we always refer to the data which is present here. I think you can see for core PPI, they're forecasting this to come out as 0.2. I think you can say blank here. we had a shutdown, so that's why we don't see any data here. You see, but from here, I think you can see they're forecasting this to come out of 0.2%. So if it comes greater than 0.2%, then that's good for the currency. So we are going to expect, let's say, a bullish US dollar. But if it comes less than 0.2, then that's bad for the currency. So we expect a bearish USD. So the second one is this one here from the same, I mean from different sources. And of course, also this one was delayed by 28 days due to the US government shutdown. The source of this is the Census Bureau. It measures the change in the total value of sales at the retail level, excluding automobiles. You see, the effect from this actual greater than forecast is good for the currency. Actual greater than forecast is good for the currency. And of course, these are always being released monthly, about 16 days after the month end. They are being released monthly about 16 days after the month end. And of course, the next release is going to be on February 17th, 2026. Actual greater than forecast is good for the currency. So specifically, when we speak about actual greater than forecast, this is what we are always speaking about. The previous data came out as 0.4%. And of course, they are forecasting this to be 0.4. They have to remain the same. They are forecasting that this information is going to remain the same data, you see, as previous month. So if it comes greater than this, then that's good for US dollar. But if it comes less than this, then that's bad for USD, you see. And the third one is, of course, PPI. Now, this is PPI. From the same source, the Bureau of Labor Statistics. It measures the change in the price of finished goods and services sold by producers. And of course, the effect from this actual greater than forecast is also good for the currency. And of course, they're always being released monthly, about 13 days after the month end. I think you can see today is 14th, so about 13 days, you see. So actual also greater than forecast is good for the currency. In the same, they are forecasting this to come out as 0.2. If it comes greater than 0.2, then we are going to experience a bullish dollar. But if it comes less than 0.2, then that's bad for the dollar. So the other information is retail sales. And this one here also has been delayed for 28 days due to the US government shutdown. It comes from the Census Bureau, measures the change in the total value of sales at the retail level. The effect from this actual greater than forecast is also good for the currency. And of course, these are always being released monthly, about 16 days after the month end. And of course, the effect from this, I mean, the next release is going to be on 17th of February. So the effect is actual greater than forecast is good for the currency. So I think you guys, all the information that we have here today, specifically going to affect the US dollar, we are expecting that in order for us to have a bullish dollar today, at that time, these informations have to come greater than what they are forecasting here, you see. So I think you can see 0.2, 0.4, 0.3, 0.2, 0.5. So if it comes greater than what they're forecasting here, then that's going to be good for US dollar. But if it comes less than that, then that's bad for US dollar. So that's the big information that we have here. So for those people who are fundamental traders, that's what we have here. You see, PPI and of course PPI and retail sales information. Now, what should traders do? Now I'm speaking with traders here. You see, all those people are going, let's say, to trade with FXpressor today, looking forward to trade these informations. We also have to remember that we have two different types of traders. We have those people who are always taking advantage of these informations because these data are always adding some volatility in the market, you see. So that's why you see some spikes which always happen within a fraction of a second, you see. So if there is any trader looking forward to take advantage of this is the specific time when these informations are going to be released. But any fundamental trader knows how to define his or her risky. You see, these informations are too risky because they're always causing very huge spikes in the markets within a fraction of a second. You see, so if you're a trader looking forward to take advantage of those spikes, then this is what we have in the calendar. But now we have the second side of traders or type of traders. And these are traders who are always taking advantage of normal movements. These are traders who trade under normal market conditions. These are traders who who trade fluctuations of prices. You see, they analyze the charts, they spot out the trading opportunity, they spot out the right area where they're likely to get the buy or sell opportunity, and then it's when they react to the markets. And these are normal traders who trade under normal market conditions. And I'm quite very sure most of the people who trade in financial markets, they are not fundamental traders. You see, they are traders who trade under normal market conditions. So if you are going to trade under normal market conditions, also, these informations are going to affect you because they are going to add volatility in the market. So if they are going to add volatility in the market, you as a trader, you also have to be very, very keen. And how can you do, or how can you go through these? You have to make sure that all your orders which will be in the market at that time have the stop orders, or they have the stop loss order, so that you can protect that capital you have. Maybe it might happen that it comes negative, and then it finds that maybe you're going bullish, and then it gives you some losses. So you as a trader, you have to prioritize managing your risk. You have to prioritize securing your capital. So make sure that you obey that. So I'm quite very sure that we are totally okay when it comes to fundamentals. Of course, these are external factors that are always affecting the markets that you're trading in a direct way, you see. So once they are released, we see the impact in the market on the same time. So this is the first side of market analysis. If you're a trader and let's say you always ignore these, don't ignore them, because they are always causing some spikes and some movements, some volatility in the market. So it's part of trading journey, you see. So if you decide to trade them, then you're a fundamental trader. If you don't trade them, then you are a trader who trades under normal market conditions, and you know the risk that comes with this information. So that's the first side of market analysis, guys. If you have any question about this, if you have any question about, let's say, fundamentals, or if you have anything that you want to add on this, you feel free, write on chat or write on Q&A, and then we discuss together here, you see, so that we can know exactly what to do. Okay, this is Ambrose Miak. Hi, hello. Okay, so if you have anything that you want to share about this, you can just put it there. But if nothing, then we have to go to the second side of market analysis. And here is when we speak about technical analysis. And when we speak about technical analysis now, is when we go to the charts. We analyze the charts, we spot out the trading opportunities, we see if the markets are likely to give us buy or sell opportunity. And then if they align very well with our strategy and everything, then we are good to go. But remember, everything that I'm going to speak here, everything that I'm going to share here, it is just for education purpose. So before you make any further trading decision, make sure that you confirm more, make sure that you have more confluence that are going to support you, so that you can make a right trading decision. So as we go to the second side of market analysis, I'm quite very sure that I have different traders here. There are people who are trading assets. There are people who are trading commodities. There are people who are trading, let's say futures, stocks, and everything that you are trading, or let's say forex. Feel free to write for me on the chat which current pairs do you want me to analyze here, so that you can analyze them together, so that you can analyze together here. And I'm quite very sure that you are going to gain something from this. And of course, not only that, we are also going to share the tentative directions of the market specifically today, so that now we can know exactly on how we can spot out our trading opportunities. And of course, for the first current pair which we are going to analyze here, I'm always using it as a case study, so that we can help in one way or the other, at least to help traders on how they can navigate these markets in a very easy way, to help traders on how they can analyze the markets in a very simple way, so that at least once we are done here, you can just go to the charts and try to do whatever we did here. So we are going to use the first analysis as the case study. Okay, this is David Kimani. Okay, DXY, Gold, USD, GBP USD. Okay, this is Peter Kirai, Hello Kaka, Out USD. Okay, this is Ambrose USD CHF. This is Daniel Maimbi. Okay, Gold. So let us start with GBP USD. For those people who are going to trade GBP USD, I'm quite very sure. Also on Euro USD, there is something, but I saw something on Euro USD. I think it might give us at least a very easy and its analysis. I think let us start with Euro USD because I already analyzed it. Let me show you. So I want to show you on how you can also navigate this and think about this. You see, today morning I had analysis on Euro USD, and this is what we're expecting. So now we are going to delete it and everything so that now we can analyze Euro USD now. Euro USD. Of course, we had a trade yesterday on EURUSD. It was a shorty trade. Of course, though the markets did not have good, a lot of volatility, but I think you can see it was a winning trade. Yes, we won this. Though we were a little bit tempted by CPI yesterday because the market was pushing down, and then we had this very huge spike, this market going up at almost tapping to our stop loss because we had 15 15 pips stop loss, and then of course our target was 40 pips. It was a very, very small movement, and that's what we're expecting. But where the market is currently, we're expecting something that the market has done its retracement, then it has continued pushing up. So I'm going to delete this so that we can start afresh with the chart, which is very, very plain. You see? So guys, this is Euro USD. I'm analyzing this, and of course, this is 11:25 East African time plus 3 GMT. Okay, so when you want to analyze these charts, there are a lot of questions that you have to ask yourself, you as a trader. You see, we have different kinds of traders. We have scalpers, we have intradays, but also we have swing traders. So I'm going to analyze USD as a day trader. You see, an intraday. And of course, as a day trader, I also recommend you that if you are looking for a target, don't look for a very huge target. You can just decide that I'm looking maybe for 50 pips, 60 pips, up to 100 pips. Those are quite very enough for someone trading these major and minor currency pairs to day trade and get those 100 or let's say 50 or 60 pips. So we are going to analyze USD, and of course our target will be above at least 50 pips. We have something called top-down analysis when analyzing these charts. You have to analyze these charts starting from the higher time frames, going to the lower time frames. And why higher time frames? On the higher time frames, you are going to see the general direction of these charts, of these markets. Generally, you're going to see if this market is trending upward, you're going to see it. If this market is trending downward, you're going to see it. Or if this market is just consolidating, you are just going to see it, you as a trader. You see? So specifically, as you can see, from the monthly time frame, Euro USD has been bullish for a long time. You see, for the past 1 year, we experienced the Euro USD moving from 1.0902 approaching to 1.1, of course, up to it touched this area here, or this level, which is 1.1940. So we had a very bullish market for Euro USD. You see, we had a very huge, bullish market for Euro USD for last year. But I think you can see clearly where the market is currently. The market is not having good market structure, so it is not showing us the good trend of the market because the market is just consolidating. I think you can see. And on this consolidation, from the bigger image, it is the continuation chart pattern. And then, of course, this is the ascending triangle. And for those people who know about chart patterns, if we get a continuation chart pattern, that indicates that after the completion of that chart pattern, there is a very big possibility of that market to continue with its rally. Now, using my experience, if the market moves and before continuing, it forms a certain chart pattern, there is a very big possibility of that market to move the same movement after completing that chart pattern. Let me clone this. So there is a very big possibility as we proceed, maybe this year, or let's say even for next year, there is a very big possibility of us experiencing USD continue pushing upward that way. See, and if it continues pushing upward, we all know about the targets. You see, the market, the next stop where the market is likely to reach is around that zone. You see, so now we have to focus more on what is likely to happen today. So we have to go and analyze where the market is currently on this very specific on very specific area. So let me also mark this area so that now we can know, or we can see if we can get our 100 pips from this area. And as I've told you that I'm using the first analysis as the case study so that every trader can also duplicate the same and analyze these charts if you are when you are on. So I'm marking this area as my resistance area, the long time resistance, because as you can see, this is the monthly time frame. The market has failed to break this zone. All the time it reaches on this area, we see this market rejecting, we see this market rejecting, we see this market rejecting all the time. So if this market is just rejecting all the time, then there is a very big possibility of this market to reject again and again and again. And then after breaking this zone, then it's when the market will now start pushing to reach at that area. But not only there, also the market is failing to break these structures going down, you see. So also this area has held this market for a long time. So also we have to mark it as our potential area. Not only there, let me mark this area also as a zone, because the market failed also to break that area. I'm marking these areas from the higher time frames, but as we go to the lower time frames, you're going to see exactly what I really mean. But also apart from that, let me mark this area where the market is currently, because I can see clearly that there are some candlesticks that show me that this area might be a very huge potential area as we go to the lower time frames. Let me also put a little bit of a zone around this area so that you can know exactly what is going to happen as we go to the lower time frames. So now as we go to the lower time frames, we are just going to focus on this area. We are going to spot out the lower trend, I mean the lower time frame trend, and see if this market is making let's say bullish move or let's say bearish move. And of course, we are going to see each and everything about that as we go to the lower time frames. So from the monthly time frame, we just go to the weekly time frame. And on a weekly time frame, you'll find this market, of course, moving from here, going upward. It had a very huge bullish rally where the market was creating clear highs and high lows. And where the market is currently is giving us a little bit of course, it's giving us a little bit of retracement and something like that. You see? Just give me a single minute. Okay, so sorry guys, we are back. But what I was just speaking, I was speaking about that you have to make sure that you do your top-down analysis, starting from the higher time frames, going to the lower time frames. You see, now I think you saw what we saw on the higher time frame. Euro USD had a poor, a pure bullish. The market was heading upward, but as you can see, sellers have tried to enter And that's why you see this market is just consolidating. You see, the market is just like consolidating, but we are going to see exactly what is happening here as we go to the lower time frame. So from the monthly time frame, we just go to the weekly time frame, and on a weekly time frame, I think you can see clearly what I was speaking about. You see, I think you can see from here going upward. This was pure bullish. You see, the market was heading upward, creating clear high highs and high lows, showing you or showing us that the market was dominated by buyers. So this market was creating clear high highs and high lows, which are characteristics which are showing us that buyers have much power compared to the sellers who are present. I think you can see pushing upward, but from here, you can see what is happening. The market failed to continue pushing upward, at least giving us high highs, and the market started doing something like this. See, something like this. So now you as a you as a trader, you as a day trader, someone who is looking for 100 pips, or someone who is looking for 50 pips, you see, your 50 pips are just on a very small portion of this market. From where the market is currently, if you get a bullish trade, the moment from here up to here, these are more than 70, you see, 90, 100 pips. Or if you get a selling opportunity from where the market is currently pushing down up to here, you can see these are more than 100 pips. So you come to realize that you have to focus much on the area where the market is currently. So I think you can see the market was heading upward. We had a very pure bullish. And from here, I think you can see the market had a very pure bullish trade. You see, had a very pure bullish trade. So currently, you are on EURUSD, but for lower time frames, I think you can see that we are in a market which was heading upward. You see, and if the market was heading upward, then it can just give something like this. You see, you can clear this as high. You see, this as high, 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 low. So from where the market is currently, we marked this zone starting from the higher time frames. I think you remember. So this is going to play as our potential area where the market is likely to give us maybe something like that if the market continues pushing upward. You see? So now those are general informations, but now you have to see exactly what is happening around this area. Not only there, let me mark this area here. This area here. Because if we get a bullish trade, then that can be your target. You see? This area can be your target. And let's say if we get a bearish trade from where the market is currently, this area here can be your first target. This area here, you see. Now I think you can see how it makes sense if you mark these zones starting from the high time frames. It is going to help you in a very easy way. You're going to see exactly what is happening. Now guys, remember, we are day traders. This is the weekly time frame. For the past 2 weeks, just remove this week, we had a bearish move. This market was coming down. So this indicates that for a bullish market, which was creating highs and lows, then this was the retracement. The market came back to retrace. Let's say for those people who are using Fibonacci retracement, if you just apply your Fib starting from here up to this area, I think you can see exactly that the market is on the golden areas, which are 60% to 50% of retracement. You see, now those people are those who are using Fibonacci retracement, you see. But not only that, for those people who are trading with simple price action, this is just normal break and retest. Break and retest, and then the market can continue pushing upward. Something like that. So now we don't trade smart money. We don't trade, let's say, price action. We don't trade, let's say, ICT. We trade by reading charts. You see, that's my strategy, and that's what I use. You see, so now from where the market is currently, the market was heading down for the past 2 weeks, but from where the market is there, very big potential area where you as a trader, you can get a little bit of this market going upward. So now in order for you to know exactly what is going on around that area, that's why I say that you have to do your top-down analysis. So from here, you are going to concentrate much on this area. These are sellers pushing this market going down. These are 2 weeks of a bearish move, you see. So as you go to the lower time frames, you're going to find this market dominated by sellers right now, see. And if it is dominated by sellers, in order for us to buy, because the market is on the zone which can give us a buying opportunity, you have to see buyers entering. How are you going to see them? Guys, from the weekly time frame, just go to the daily time frame and focus much on these areas where the market is currently. I think you can see clearly how this market was giving us bullish characteristics. The market is giving us high, low, this is high, high, this is high, low, this is high, high, and this is high, low, this is high. The market failed to continue pushing upward, and it showed us this bearish move. And these are 2 weeks of a bearish move that you saw from there. You see, but as you can see, I think everyone can see clearly where the market is currently on Euro USD. This is the zone, and we mark this zone starting from their time frames. You see, I think you can see what's the market actually here. We had a bullish rally. The market ended on this area. We had a bullish rally. After breaking this area, the market came back to retest on the same areas. We had this bearish rally starting from there, bearish rally starting from there. The market broke that area again. It came back to retest. We had that bullish rally. The market is on the same area. That's why I'm quite very sure if you're a trader, you think about going long around this area. You see, you think about going long around that area. You won't just, you see, you won't just buy because the market is on the area of buying. You won't just place a trade because the market is on the area giving you an opportunity of buying. You have to see buyers entering, and then it's when you will think about entering your buy trade. Where the market is currently, we'll start looking for, let's say, buying opportunities, but we have to see buyers around this area. If you're a trader and you know about candlesticks, please write for me on the chat. That's why I said that the first analysis is all about mentorship, to show you on how you can analyze and something like that. I think it can help in one way or the other, at least to equip you with tools, to equip you with knowledge that can help you to navigate these markets in a very easy way. You just analyze anyhow you wish. So if you know how to analyze this, you'll just switch anyhow you want. You see, if you want to be a scalper, you just switch to the lower time frames. If you want to swing, you just stick to the higher time frames. You see, I think you can. For those people who know about candlesticks, I think you can see these candlesticks here. You see, we have a bearish candle and we have a bullish candle on the area where everyone is thinking that buyers have to enter. You see, and I think you can see how buying pressure is stronger compared to selling pressure around this area. So this shows me that buyers are here. In other words, this bullish candle has engulfed the bearish candle. You see, so this indicates that for this selling pressure or this selling movement, which was pushing down, there is a very big possibility that this movement has come to an end, and now buyers can take over and try to push this market upward. You see, try to push that market upward. You see, I think everyone is clear about that. You see, I think everyone is clear about that. Now, in order for you to know exactly what is going on, you have to go to the lower time frames. And from the daily time frame, as you go to the 4-hour time frame, the moment from here coming this way, you'll find this market giving you clear low lows and low highs, something like this, because this market had a bearish 2 weeks. You see, was bearish for the past 2 weeks. You see, now where the market is currently here, you have to see this market starting rejecting. You see, showing you that we won't continue with our bearish move, then the market has to start moving upward. So from there, you just go to the 4-hour time frame, and you are going to find that specific thing that I'm speaking about. You see, I think everyone can see clearly that this market was breaking structures, going down, creating low lows and low highs, creating low lows and low highs, creating low lows and low highs, breaking structures and going down. I think you can see how this market is started rejecting around this area. You see, we had this bullish rally, and the market has come on the same area. That's why, from what I see, there is a very big possibility of us getting another bullish rally. Not only that, if you look at candlesticks, you see this is the reversal candlestick. The market confirmed that buyers are there. That's why you saw that market pushing upward. Okay, the market came back around this area. You can see how tiny these candlesticks are, and of course these are reversal candlesticks, showing you that there is a very big possibility of that market starting pushing upward. So if there is anyone thinking about trading Euro USD today, there is a very huge possibility of us getting a bullish euro against US dollar today. And of course, you as a trader, you have to know your limits. You have to know where to put your SL. You see, maybe risking 30 pips, anticipating to get maybe more than 60, 1:2, or let's say 1:3, or something like that. So if the market moves, let's say maybe up to here, by risking, let's say those 20 pips, you'll have got your 1:2. Easy and clear. So I'm quite very sure that we're okay with the Euro USD. Is there anyone with any question about Euro USD? Just feel free. If you're okay, you can also write for me on the chat that we are totally okay, totally okay. Now, for those people who want, let's say, to reduce the stop loss, what you have to do is just move into the lower time frame, specifically the 15 minutes time frame. You find this market rejecting. If it rejects and shows you that the market has started creating the bullish characteristics, which are high highs and high lows, then that's indicates for you that this market has started its bullish movement. You see, so simple and clear. So that's the very easy way on how you can do your top-down analysis here. Okay, any other currency pair that you want us to analyze in quick? Okay, people want me to analyze gold USD. You see that people are trading gold USD here, so we have to go and check at least gold USD and see if there is anything which is likely to happen in gold USD. Then I think we can call it a day. So let's go and analyze gold USD. Most of traders who want money, they're here. And of course, they're looking for to trade gold USD. Last time we analyzed gold USD here, it gave us a lot of pips. I'm quite very sure my analysis is still here. If I've not deleted it, you're going to see it clearly. Yeah, it is still here. And this is what I was speaking about. Last time we were here, gold was somewhere here. And what we were expecting was a bullish rally on gold. I think you can see we had a clone of this. The moment from here up to here, the market consolidated. It gave us a bullish, bullish continuation chart pattern, which is some sort of a triangle. Of course, ascending triangles like this. So after that, the market wasn't on the zone here. So you expect that market to move around this area. And of course, those were more than 300 pips. I remember those were more than 300 pips. The movement from here up to here, I think I see 300 pips, 305, something like that. I think, yeah, that's what we saw on gold last time. So I have to delete each and everything and analyze afresh. You see, so if you are going to trade gold, remember, it is among the volatile things that will, among volatile things that you are going to trade in these financial markets. If you are trading, let's say, something like those US indices, something like US 30, NASDAQ, gold, silver, USD, and things like German 40, things like the most volatile assets that you're going to trade in this, of course, those ones, and gold is among them. So if you're going to trade this, if you don't have a good trade that you have held for a long time, maybe that you're swinging it, then you are going to scalp it. See? So if you are going to trade gold, there is no way out. You're going to scalp it. And how are you going to scalp this? Because a 15 minutes candle of gold USD can move even more than 200 pips, you see. So you might find that you got a buying opportunity in the morning, you were long on gold, and you got that move, and then within a fraction of a second, that move is gone. You see, that move is recovered. So if you're going to trade gold, you have to be very, very keen. And of course, you must be a trader who knows what you're doing, because also the risks that are present on gold USD, they're a little bit high, you see. So we are going to do our top-down analysis, and not on gold. If you are going to trade gold, of course, you won't start it from very far, because you know exactly that gold USD has been bullish for a long time. It is in last year where we experienced the all-time high of gold. We had a very huge bullish rally where gold passed over $4,000 per ounce, you see. So it was very, very bullish. And of course, that bullish rally for this January of this year, we can see that the rally has continued, you see, because where the market is currently here on 4,630 something, you see, per ounce. This is the all-time high, guys. You see, this is all-time high. So we don't have the reference where gold is going. So now we have to scalp this, and we have to go and check on the lower time frames and see exactly what gold is doing. You see, so now from here, we are just going to deal with a very small portion of that market. Bear in mind that gold is very, very bullish. So we can just deal with a very small portion of that market, at least starting from there. Not only there, let me mark the low of last year and the high, the low of last month and the high of last month. These are going to help me as I go to the lower time frames, and let me mark them as a zone because they can help me as I go to the lower time frames. You see, this can play out as my support and resistance and something like that as I go to the lower time frames. So you will see nothing on the monthly time frame if you are going to trade gold. So from there, let me go to the weekly time frame and see if I can see something from this area. Of course, the area that I marked, this one here, you see, the area that I marked, this was the high which was broken. Then the market continued pushing upward, something like that. So I think you can see clearly, even on a weekly time frame, God has a bullish rally. You see, God has a bullish rally. And if it has a bullish rally, we have to go and see exactly what is happening around that area. That's why I've said that if you are going to trade gold, if you are doing top-down analysis, from the higher time frames, you will see nothing, because a 15-minute candle can move more than 100 pips, or let's say 200 pips. You see? You see? You see? So specifically, we are going to see exactly what is happening. At least you can now start seeing that this market having a bullish trend, this market has started, at least we can see those clear highs and high lows, market going and coming back to retrace. So currently we are on a bullish rally. We are on its high. You see, something like that. So let me mark this zone here, this one here. Let me mark this zone here. It can help me as I go to the lower time frame because it caused the buyers to start that bullish rally. So as I go to the daily time frame, I'll just focus much on that area, you see, specifically on that area. And I think you can all agree to each other that gold is on its bullish rally. You see, bullish rally, creating clear high and high low, at least see on the daily time frame. I think you can see the market created high, created low, created high, some sort of low, and currently the market is this market is moving upward. So let me also add some levels and zones so that these ones also can help me as I just go to the lower time frames. So I'm going to focus much on this area where the market is currently, where the market is on its bullish rally. So on the 4-hour time frame, as on the 4-hour time frame now, you can start seeing, you can start seeing the candlesticks, clear candlesticks. You see, the market is on its bullish rally. I think you can see this is the reversal chart pattern. Of course, head and shoulders, clear head and shoulders. This one here, clear head and shoulders. This is the left shoulder. This is the head, right shoulder. The market broke that area. It came back to retest. This is clear high. This is clear low. This is clear high. The market had a little bit of pushing down, and currently this market is heading upward. We are in a bullish gold USD. This market is likely to give us another bullish rally. You see, I think you can see where the market was rejecting around this area. It rejected a lot for more than, let's say, a lot of time the market was rejecting. I think you can see here it rejected, here it rejected, but currently from what I see, this market is continuing with its bullish rally. You see, with its bullish rally. So as we go to the 1-hour time frame, we are going to see it clearly. You see, you will see it clearly. And these are the rejections that I was speaking about. And for gold, the rejection from here up to here, these are 500 pips. You see, the rejection from here up to here, these are 500 pips. And from this time when I'm speaking, gold has a bullish rally and it has moved over 700 pips. You see, so now you have to focus much on that area. This area is the resistance area. Every trader is expecting that this market has to give us at least a little bit, another maybe 500, 400, or let's say 200 pips of a bearish move, you see. But from what I see, let me zoom in more on this and see if sellers are here or maybe buyers are continuing pushing this market upward. Now, the bad thing about this is that we don't know exactly where this market is heading to. You see, we don't know exactly where this market is heading to because we don't have any history behind, because it has reached an all-time high. You see, so from what I see, for those people who are trading gold on 30 minutes time frame, I think you can see the market is on its pure bullish. You see, this, we can term this as high, low. This is high, this is 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 high, low. So gold is giving us something like that, you see. Now, if it happens that gold has broke this area here, at least this last high here, and we see any candlestick or a bearish candle closing below this, then we can think about going short on gold, at least targeting this area again, you see. But if you won't see that, gold might continue pushing upward, giving us low, high, you see, low, high, and something like that. So that's what I see generally on gold. You see, even if you go to the 15 minutes time frame, that's what you are going to see. I think you can see these clear market structures giving you clear high highs and high lows, high highs and high lows, high highs and high lows. Though we had a selling pressure around this area, the market recovered that, and I think you can see. So if from what I see here, these are sellers, you see, these are sellers showing us that they're there, you see, and also selling pressure. So there is a very big possibility from where the market is currently on this area here, you see, on this area here, we can get a little bit of a selling market, you see, a little bit of a selling market coming around this area. And bear in mind, your SL should be very tight because you see the demarcations. You see the demarcations, you see. So your SL should be very, very tight around this area there. And then someone can target this area. Those are more than, let's say, 100 pips, see. So you have to make it very, very clear that your SL has to be very, very tight. See, that's what I see also on gold USD. So guys, remember, this is FX Pesa and FX Pesa Academy. I'm Prudence Maximilian. Of course, our time is up, but at least I think there is something that we have shared here. And of course, this can help you in one way or the other. So guys, if you are going to trade, remember, FX Pesa is the best. FX Pesa provides you with education. FX Pesa makes sure that at least you're getting something from this. Make sure you trade with FX Pesa. So if you don't have the account, you can just open your account by using the links on the description. Not only there, but also you can visit our socials. Just go on Instagram at FX Pesa, YouTube at FX Pesa, everywhere at FX Pesa. But also, don't forget to follow me. I'm Prudence Maximilian, the Komika Kataifa. Of course, Forex Kid on Instagram and everywhere on Instagram. There is this. This is Harris Penalist. Let's talk business. Okay, you can just go to Instagram. You can just go to Instagram and follow me. Just write Forex Kid. You will see this face. You can send the message there, and then we can speak starting from there. So guys, remember, if you have to trade, make sure you trade with the best pass. But before we can conclude on this, guys, trading is either buying or selling. You're going to buy or you're going to sell. The difference between those people who are making it in trading and those people who are just losing money in trading is just knowledge. If you have knowledge, trust me, you are going to see exactly what you are doing in the markets. You won't just assume in these markets. Let's say, for example, we have analyzed the gold there. Gold is heading upward, but from where the market is currently, is showing us that there is a very big possibility of seeing sellers at least pushing a little bit down. So we risk there. We just put our stop loss and then we put our target and we risk it, you see. But at least you know exactly what you are doing. So if you want to prosper in this industry, if you want to push in this industry, make sure that you get those skills. And of course, from here, at least at FX Pesa, we give you something that can help you in one way or the other. So if there is anyone who wants to get me, make sure you check me. My Instagram is there. Just write Forex Kid. Or maybe you can just put an email to FX Pesa support. They are going to help you in one way or the other. So thank you so much for your time, guys, and have a blessed day. Morning, of course, heading to afternoon. Thank you so much. Peace.